What's going on, YouTube? It's your boy Don, aka Dope Boy Vlogs, back with another video. Today's February 19th. I took a couple of days off from recording videos due to the fact I've been handling a lot of other stuff, trying to help students and trade for myself, and working on a lot of projects. But yeah, the goal for this channel is to put out as much content as I can as far as trading stuff, or just anything that helps in trading. Right now, I'm going to just be uploading pretty much anything that I've used in my trading journey that was beneficial for me, and things that I've taught my students or people I'm teaching currently now, that helped them out along the way. I want my channel to be very resourceful for people to go to and have a way to study, because not everybody has a mentor, or sometimes people just don't have the funds and to pay for a mentor or a coach or a course. So YouTube is free, right? And they always say you can't learn on YouTube, and I'm trying to change that lane, right? That's my goal. And today's video, I want to talk about supply and demand, which is a pretty awesome tool to use. And believe it or not, this is like my fourth time we're trying to record this video. uh, you know, YouTube is a great source to use, but trying to have proper video etiquette sometimes can kick your ass if you're not used to it. But it's whatever. I don't mind it. I just try to battle where I can. But that's a topic for another day. But yeah, so like I said, supply and demand. That's today's topic. That's what I want to go over today. Like I said, it's a pretty awesome tool to use. I find it very beneficial. Yeah, you guys may too. So without, rambling on about anything else, let's go ahead and jump into it. So for the people who don't know what supply and demand is, supply and demand is a method used just like support and resistance. The main difference between the two is supply and demand, instead of it being a set line, like support and resistance. If you think about it, a lot of the times when people draw support and resistance lines, and take my chart that you're looking at, for example, right now, these red lines are based off my monthly time frame, and these black lines are based off the weekly. But those are support and resistance lines, right? And those are my psychological levels. Those are where I feel price is going to go to and respect, that area as support and resistance. And people have to take into consideration that, when it comes down to support and resistance, that, your support and resistance line is different from mine. It's different from any other trader out here. And it's just a psychological level. It's just a line where you feel that, price is going to play strong. It's gonna play its part and be support and resistance. Now, like I said, the great thing about the supply and demand strategy is it gives you a set area versus just a line, right? Which is some things that we kind of overlook. I'd rather have an area to look at than just one line, because psychologically, if your line gets tested too much, that can make you do some things that you don't want to do in trading. And I'll get into that while we're actually, gutting up this chart. We're on GU, and with supply and demand, like I said, it's mainly based off of an area. And how do you trade it is whenever price gets to an area of support, which will be a demand zone, you want to buy, you want to look to buy. And whenever price is at an area of resistance, which is supply, you will be looking to sell. Now, normally how I draw my my supply and demand zones is I go down to my 4-hour or my 1-hour time frame. The reason why I don't do it on the daily, right, is because if you pay attention to the daily chart, the zones that price throw out are going to be a wider spread. So to give you an example, like this wick down here, if I just literally took my crosshairs and measured out the price of this wick. That's about 110 pips, 111 pips, roughly in that area. That's a big area. It's a big zone to be trying to watch, right? That's something you don't want to do. So the best way to kind of, smallen up that zone is obviously go to lower time frames. So, like I said, I'll go down to the 4 hour or the 1 hour to draw up my supply and demand zones. Now, the first things first, how do you identify what is a supply and demand zone? Like I said, it's just like support resistance. The only difference is it's an area. So, if we're looking at GU right now, right? If you pay attention to like this whole entire area right here, you can see price dipped into this zone a couple times and bounced out and went to the upside, like every time. So that lets you know that this is a pretty solid area of support. And if we're just looking at, that support line being the weekly, we can obviously see that. But as I said before, if you really look at what's going on, how many times did price dip into or hit this weekly support, but it broke it and it came back up above it? And that's where, support and resistance has its cons. Because if you was just using this as a entry point or a line, look how many pips this thing goes against this. We're talking about 80-something pips. And a lot of times when we trade, nobody's normally just having an 80 pip stop. That's not too likely to happen unless you have a big account size. But that's likely not to happen. But this is why I say, supply and demand kind of gives you an area to stock. And then you just pay attention to price action and what those candles are doing. That'll tell you everything that you need to know. But let's go ahead and jump into how to draw these up and how to take advantage of these and trading. So let's just say you were watching GU, right? And you were right here. Well, price was right here. You're saying, hey, this might be a good time period to jump into a trade. It's at my weekly support line, but I don't know if I should just take this as a buy just yet, right? So let's figure it out. Let's say everything to the right of that area that I just circled has not happened yet. Let's get a vertical line. We're going to put it like right there. So let's say everything to the right of this vertical line has not happened yet. Now I'm going to draw an arrow here so nobody's confused. Everything to the right of this has not happened. Now, what we got to do is we got to figure out how valid is this area. All right, and the best way to do that in trading is, believe it or not, look left, which a lot of people fail to do. Just literally look left. Looking left tells you a lot because you're looking at previous data on what price did, and price is going to tell you everything that it's done or probably going to do. So if we look left, right, and normally I don't just base it off the first thing that's left to where I'm at. You got to pick up more data than that. So, but if I look left, right, we can see price came into this area and hit, twice, made a double bottom, came out, retest, and then went up. And now we're back here again. But if I go back some more, we see right here, price came over here and did the same thing, kind of formed the inverted head and shoulders, and then went to the upside. We scroll back out some more. We see at one point, price was actually below this level. Because you remember, if we're literally looking at price like this, I'm going to scoot this about right here. Because remember, at this yellow line, everything to the right of that has not happened yet. But we know price is above this level. And we already looked at these 2 points. Now we're right here. Price broke it, it retested it, and it went to the upside. But prior to this, it was under it. It was retesting it as resistance. So obviously this level has to mean something, right? Now, like I said before, trading is all trader preference. It's all judgmental based off of what you think. Your analysis is your analysis. If you're going off of what other people say or, taking it into consideration, that's going to mess up your analysis overall. But, yeah, so we know that this area is, like I said, relevant because price showed it playing as resistance and it's showing it playing as support. But how I draw my supply and demand zones is I want to find the first time price actually came and tested this area as support, which will be this area right here. Because this was just when they broke it, right? Broke, retest, came up. Now it came back down to test this as support. So that's the first time. Now, what I want to do is draw my supply and demand zone. In this situation here, because we're looking to buy, this will be a demand zone. But how I draw this up is I like to find the breakout candle, which took price into the direction before it came back to test the area where we're at. So what I mean by that is I want to look for this area right here because price broke out to the upside before it came back down to test the area where I'm at. So if I'm going to be drawing my supply and demand zone, how I like to draw them up is, delete this real quick. And I normally, like I said, do this on the hour or the 4-hour time frame. But I want to go grab a rectangle box, and I'm going to start from the wick of the previous candle, take it to the body of the breakout candle, and then I'm going to drag it all the way over. Just like that. Now, if you want to zoom out, well, and this, let's just leave it right there for right now. Because let's just say everything to the right has not happened yet. Right? So that is your demand zone. Go ahead and write this here. That's your demand zone. Right? Now, all we got to do from here is build more confluence. So like I said before, whenever price got into this demand zone, we got to figure out, you know, is our buy going to be valid? Now, like I said, using supply and demand gives you an advantage to actually stalk an area versus, you know, just taking a line and, you know, placing your risk to reward and saying, hey, whatever goes, goes. You want to kind of have an edge in trading. So give you, you know, try to put as much elements as you can together that you want to kind of deal with. That's going to help you figure out, you know, this is going to work for me. So, like I said, this when price came back down, it formed a double bottom here out of this demand zone, and it came back to the upside. Now, where we're currently at, right, if you're paying attention to this, stuff that I like to look at is recognition of candlestick patterns. So you see how these bearish candles were coming down, coming down, coming down. But right when we got into this demand zone, right, this candle right here, if you pay attention to it, it threw a big wick, which was about 23 pips long before it actually draw back up and formed the candle that it formed. Now, that is a major sign of, you know, seller exhaustion, meaning that, you know, sellers are not too much handling the pressure in that area, meaning that the buyers are probably going to take over. And, you know, another way to figure that out is you want to go to different time frames and kind of figure out what's going on, right? You don't get all these time frames for no reason. You want to go to different time frames to try to figure out, you know, what's happening in the market. So what we're going to do is go down to the hour time frame and go look at that same exact area where we're currently at and see how is it respecting this this demand zone. So we go over here to the left a little bit. Now, one of my other previous videos, I discussed market structure, and if you pay attention, you can see that price actually came down and formed a inverted head and shoulders, right? Clear inverted head and shoulders and took off to the upside. And this is the wick that was forming on that 4-hour time frame. So when price came down, it threw that wick to the downside, but it closed as a bullish engulfing. And as soon as price had broke above that weekly support or resistance line, you had a bunch of retest time periods, right? See all these wicks right here? Those are nothing but just retest time periods or entry points, literally. So as soon as price would have broke, retest, 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 retest. So all this time period, you had about from 7 in the morning till about 10 o'clock to take advantage of this trade. And since we're basing it off a higher time frame, all we had to do after that was just literally set targets. Let me go back real quick, because obviously, you know, would have been looking to go long. So let's get a long position and put it right here, right where price retested. Now, if you've been watching my videos before, you know I like to do a 33 pip stop loss, right? So I'm gonna do 33 pips because that's normally where I put my stops at. And if we're gonna go 2 for 1, we're gonna do 66 because that'll be, you know, doubling what I'm risking. Now, you could have done this a couple of ways. If you're just using, you know, risk to reward like I use, which is 33 pips, that's all well and good. Or, you know, the basic trader knowledge is, you know, just put your stops at the lowest point where price was, which would have been like right here below this candle. You could just place your stop loss there. But to look for target areas, all we would have done was just go back to the time frame that we were on, which was the 4-hour time frame, and then just look at structure, right? And what I mean by looking at structure, just once again, look left. Go look where price once was. We're looking to buy. We're looking for this to go to the upside. So what are areas on the 4-hour time frame that we feel like, hey, price is going to get here and probably going to respect these areas? So my first potential area would have been here. Why? Because when price was actually on the way back down to test this demand zone, right? Price came down, made a low, made a lower high, made a low, made a lower high, and then retest our demand zone and came back and retested this previous lower high. So I know based off this 4-hour time frame that this area right here is some type of structure that price could go up to and test if it respects this demand zone. So that could have been my target 1 area. Same thing here. This could have been target 2 and then target 3. And if we look and see what happened, let's move our vertical line real quick. Come on, trading. My mouse has like serious lag to it. But if we're paying attention to what really happened, price went all the way up to that structure area, like I said, which was target 1 at 90 pips. And it went all the way up to test, you know, target number 2, which was 186 pips. So easy trade just based off of a few elements, right? Support and resistance, a demand zone, and you see structure. And you use recognition of candlestick patterns, and boom, you got 180 pips in the bag. Trading is not really that hard sometimes, but you know, hey, some people make it harder than it need to be. So that's a demand zone. Now we can go right over here to the left, and we can use this area where price was treating this as resistance, and do the same thing, or see the same thing as a supply zone. So same situation before. Right, this wick right here. Let me draw an arrow so you guys can see where I'm starting at. This wick right here on that bullish candle. You start from the tip of that wick to the breakout of, to the body, excuse me, of the breakout candle. And drag this down a little bit lower. Boom. So this is a supply zone. Right? So anytime price is at a supply zone, you're going to be looking to sell. Anytime it's at a demand zone, you're going to be looking to buy. And it's the same thing as before. Price got to this area. It tested this area of resistance or this supply zone. It respected it, dropped down, came back to the retest. And once again, this is the reason why I say that these areas come in handy more than a support and resistance line, because you can kind of just stalk price action versus just going with, you know, whatever happens, you know. Like I said, price came up, respected it once. Once it dropped down, it came back a retest. You had your first bearish engulfing candle, which was right here, right? But then price came back up and retested this again. Now, the cool thing about this retest was this candle right here that had this long wick, which was about, what, 50 pips, right? 50 to 51 pips. That is a mean rejection. So if you see something like that, automatically I would have took that as a sign, you know, hey, this is a solid area to sell. So you could have literally took the short position or the sell. Same thing again. Stop level at 33 points, right above the previous high. and put your profit. Let's just do 2 for 1 for right now. And then what happens? Price dropped down about, let's see, 145 pips. You probably would have got about 130. Easy. And it's the same things. And structure formed here too as well. A market structure pattern. Not the cleanest, and I stated this in one of my other videos. It's not going to always be the cleanest, but you kind of got a head and shoulders. Not like I said, the cleanest, but nonetheless, it did form that. And if you want to kind of see it better, go down to lower time frames, and it probably will, kind of clear up versus being bunched up. On higher time frames, it's going to be a little bit more chunkier than it would be on lower time frames. All right, so literally, price respected it. And it dropped down, like I said, 150 pips, 145 pips. And, probably went a little further than that. But there is a con to supply and demand zones, right? And that con is the more times those areas get tested, the weaker that area gets. And, it's eventually going to get broken. And just to give you guys an example of that is when price came right here to test this area once, tested it twice. I'll consider this a test. It didn't go deep into it, but you can consider it. So that's already 3 hits. You had your 4th one here and a 5th kind of test here before price actually, broke that structure or broke that supply and demand zone or area resistance. Broke, retested it, went to the upside, and then when it came back to test it as a demand zone, it's the same thing, right? You got a kind of a test here. You had your break, come back, another test here. So that's already 2 hits. Scroll over some more. You got your hits here, hit here. So we already have 4. That's what? 1, 2, 3, 4. Well, we'd have got in that potentially. That's 5. Count this whole thing as 6 and 7. So we had 7 hits to that same demand zone that was once a supply zone. And look what happened. Price broke that area, right? Like I said, because the more times it gets hit, the weaker it does get. But I'm gonna show you one more thing before I end this video. So as of today, currently, right, GU broke this demand zone, right, with some solid bearish candles, which are big, thick candles with a lot of closed volume. If you pay attention to these candles here, they're real choppy, right? They're real choppy. They're not strong. They're not, big candles like these here. Which, like I said, in the sense, yes, it does show selling pressure, but at the same time, it still shows that they're not strong just yet of that area. So that's why when price did break right here, it did come back up and above this area one more time. And like now, it actually got some strong volume to close through this area. So now my guess is this demand zone is once again going to be a supply zone. And we just got to see what GU will do from there. And honestly, if I go back to the left, the one time that it did break it over here, I think it did the same thing. You got a big candle, but let's go to a high time frame and see what it did. Just so we can see. Yeah, so right here, here's that break the first time, and this is on a high time frame. So this is why you want to, flip through time frames. No set time frame is always going to be 100% right. So this is why you want to flip through time frames. But right here, you had a strong push down, but right before it broke, we had a big indecision right here with the sellers. They had enough strength to push it down, but another indecision. And then the bulls brought it right back above the zone and then took it to the upside. But yeah, other than that, that's supply and demand. Like I said, is a solid source to use. I do love this strategy. Like I said, I don't use it as much as I used to. But for anybody that's new to trading, that want to have something to use, definitely take advantage of supply and demand, like I said, versus just using strictly support and resistance. If you guys are looking for coaching or mentorship, my Instagram and email is in the description box below. Don't hesitate to send me a message. If you guys, need any more study material, comment in the comment box below. Give me some ideas or some things that we can go over. Other than that, I do appreciate you guys tuning in. Study, study, study. Take notes, and happy trading.